Hello and welcome to Macro Mondays presented by the Gokhstein News Network. I am your host, Landy. Today is August 11th, 2025, and we're going to look at Bitcoin today. We kind of had an ugly Monday close, but there are some interesting things that are happening kind of market-wide, but also here with Bitcoin, as Bitcoin did recover the prior range during the Sunday session. And, that offered up an opportunity for CME Open, and that CME Open saw a lot of short fills, and then when subsequently the market open in the US occurred, we saw the a lot of the spot side of some positions be sold off, and that's kind of normal when you get a gap up over the weekend like this. They ran it across crypto and TradFi, so let's take a look and see kind of where things landed here. We did get a close in at 118,700, so it's well within the range. Let's go ahead and turn on the support and resistance zones of interest, then we'll get into some higher term time frame stuff for Bitcoin. We'll take a look at Ethereum as it nearly hit target at 4,400, just shy of there. And we might even look at traditional markets for a moment here because there is some interesting things occurring. Now, Bitcoin, as I mentioned on Friday here, recovered the range lows, and I define the range lows here as, essentially just shy of 118 here at 117.8 to around 115,700. We saw the nice recovery back here on Thursday. Friday candle did test down, and over the weekend, we saw on the Saturday candle a push to try to get back into the range above around that 117.8 to 118. And then, of course, we did see that occur on Sunday. So this occurred from Saturday into the Sunday session. Once CME opened, we saw the run begin all the way through the top side. So I had mentioned prior that, above 120 to 121, we're looking to run the highs. We did get that run of the highs. We didn't quite get that 123. Where'd we come in at? 122,320 here, essentially. So now this is, kind of where, things, when I say that things, I need to see closes for continuation, this is what I'm talking about. So to actually go and test the all-time high and higher, 123 to 125, I need to see closes specifically above the 121 area and the upper second standard deviation. Now, if we do see that occur again, of course, we'll get some hints in the lower term timeframes, just shy of that 121, right around 119,863 to 120, then I would be looking right back to the 121 area by the daily upper second standard deviation, and then any trading above there, even in lower term timeframes below the daily, and I would look for a run of the most recent high or attempt to run to the most recent high at 122,320. Any breaks above there, then we're looking to 123 to 125 and potentially more, of course, on closes above there. Swings can go for more too, but that's where I'm giving it room, 123 to 125. Now, on the opposite side of this, where we see a high put in, if we do see a daily close now below 118, 118,050 bucks here, well, then I'm looking right back into this area of interest. The top side is essentially 118. It's coming in at that 117, what is it? 117,781. It's essentially 118 to that 115.7. And, I'm looking across the timeline. I'm seeing a lot of people call out this structure right here. I'm not looking at this as a higher low. This was a high that was averted. So it was a swing high to swing, higher low. It's kind of a high side consolidation with an inverted hammer. So that inverted hammer on Saturday did give me the indication in lower term timeframes that we might go back to fill that out. Of course, we certainly did and got even more on top of that, right? And realistically, the last higher low on the daily was this high that turned into a higher low. And this is because this did set the high ever so slightly, but it did set the high on a close. So if you're looking at like an RSI indicator or anything like that, you would see that this is a high to a higher low. So this is the real last higher low here. And yes, is this area important around the 115.8? Well, yeah, it's right there at the bottom side of the original range that we had here at 115.7. So if we did see that dropped, then we would be looking, for a run of this swing by the lower first, which is coming in right around that 114.750. Anywhere below there, we're looking right back to run this last closing higher low, which is coming in at around 114.1 to that lower second at the, right around 112 in the upper half of the 112 region, 112.680 in this case. Anywhere below there, of course, we're back to that 112 to 109 area that was just ever so slightly dipped into on the one candle here back on the 3rd of August. Now, there is daily areas of interest there around the 110.5 or so, but realistically, not looking for any of that right from here. I'd be paying attention to the local area. So a high would be set, and this is an ugly candle. This is not what the bulls want to see for the kind of close that came in. And in fact, it would have been an ugly candle if it closed even inside the 120 to 121. Now, that being said, it doesn't mean that the bulls can't push on through, but it's going to be a tougher ask for the bulls from here. Maybe a little bit of lower term time frame consolidation. Granted, if we do see price trading back above 121, that would look great to at least go and attempt to take out and close above that high. And that's really what the bulls need to do to run the all-time high and higher and really get a move going for expansion to the upside here. Otherwise, it just looks like consolidation again. And a high will be put in, as I mentioned, below around that 118 and $50 there. So this is kind of a look that we're getting because we have a lot of economic data. Specifically, we have CPI data coming out. And I do believe, based on some of the early indications from some of the month-over-month numbers that we've gotten in that kind of are incorporated into inflation data, I think we're going to come in under. Now, the market would, in my opinion, have to readjust to that. I know that many are expecting it to be on par with the projections, but it might end up coming in under. And if it does, there's going to be some readjustments. What does that mean? That means just watch the range to the upside, 120 to 121 and 118 to 115.7 there. That's really all it means. I can't predict what the market reaction is going to be. Maybe when I go through some of the TradFi side of things here for a moment, we can we can get a feel for it. But things can reverse very quickly, especially if it's significantly under, which would be a surprise. That means that there's going to have to be some readjustment of positions. And in this case, that could be what we saw with the Monday candle. Is maybe some players are like, you know what? If it comes in under, let's get some arb to squeeze here, and kind of and position accordingly. And in this case, we also have on the 14th, which is going to be on Thursday, that is going to be producer price index month over month. And then we will have on Friday the sentiment retail sales month over month and Michigan consumer sentiment panel. So a lot of economic data coming out this week. Not really surprised to see the sell-off after the big gap up when CME opened. It is something worth keeping an eye on, though, because price action is indicating from this stage right now that we have to be aware of the top side resistance if we start to see things rising again, and just be aware of a high being put in. Looks more like consolidation, even going to the lower term time frames. It actually has a chance here being above the basis to come back up and run. But there's no real clear divergences on the way up. Looks pretty good. So just keep a close eye on it. Things could start turning in the lower term time frames. We need to see that build into these higher term time frames. What does a 12-hour look like? Yeah, 12 hours kind of twisted down against. No real big divergences, though. There is some historical divergences, but they're all corrective. Just keep a close eye on it because the economic data might change the way that flows go in a pretty expedited fashion in the lower term timeframes that could change the outlook of these particular candles. So let's go ahead and go to the weekly here. Weekly looks good. Weekly looks really good. Nice swing higher high to swing higher low. Now we did get a high put in, and to put in a high and then a higher low right off of the candle that put in the high, that's pretty bullish. And then there's obviously the opposite take is that if it fails to close above 123, even if it swings above, then it gets dangerous for the bulls. So there is an opposite side to that. And where would we see this close a higher low? We'd see it close a higher low on closes above 119,465 in this case. I would even like to see it above that, again, 121, and specifically above the 123 for closes. So if we do see a higher low set here, you don't want to see a higher low coming off of a higher high that was just set that fails to get past the swing high, in this case, the all-time high at 123. So that is something to be aware of. It is a bullish setup. The early week rejection, we still have to monitor throughout the rest of this week, but just, it's kind of a different look. And of course, because of it being the summer and a bunch of economic data coming out, and the expectation that there might be rate cuts coming soon. So, a lot of positioning happening during this time frame to set up for Q4, and it's something that we'll likely see throughout the rest of this month into September. So, nothing too crazy going on here. Again, no divergences. Obviously, that's not going to change because we went straight up after putting in the high. We do have momentum twisted down against us here for the bulls. 122.5 is the area to beat to turn momentum back to the upside. So realistically, what do we look to then? In terms of the volatility areas of interest for this weekly, the last, the swing low and closing low that could be set, it's not set yet, but the swing low coming in, dipping into an area of support, that is considered a flip. It was even, slight dip in and then front run on the next candle, didn't even go for a little bit more there. But the volatility levels of interest I want to show you here because it's important coming into, it will be very important coming into the weekly close. And that is that the upper first is right here, right around 117. And we want to see, if we're bullish, we want to see closes maintain above there, or else it puts us in the volatility area of interest much lower between the upper first and basis as a potential for volatility. Now, of course, that's different than the support areas along the way, but we will likely see by the end of the week, no matter where it closes, as long as it's closing above the basis, we're likely to see the basis somewhere up around this area here, which is a daily level around 107, 270 to that 108 level. Currently, it is at 105, which is a pretty important area in this structure over here for candle structure on the weekly. But right now, we are playing in the level of volatility between the upper first at 117 and the upper second, which is right around 129. So if we do see a breakout above the 123 level, I would take it step by step on the daily, 123 to 125. Close above 125, start to target this 1414 up here at 128 to the upper second, which would move up to somewhere around 130. So I've been saying that for quite some time, and that has not really changed. So that look has remained the same. Let's see, what else did I want to get to here today? Yes, and Ethereum I did want to take a look at. Yeah, that's right. So Ethereum looks strong. It is in expansion on the weekly, but it was already pretty heavily expanded coming off of this consolidation here. So target is around that 4,400. Bulls want to see closes above there. Is alt season here yet? Everyone keeps asking me. No, it's not. I want to see closes above 4,400. And then we need to see the 4630 to that 4870 up here beat. When we see a weekly close above there, then you can start saying, yeah, you know what, alt season is probably here. But what I will tell you is you need the other large caps starting to get back to their all-time highs to really kick it off in earnest to see that all pump kind of alt season. I don't know if that's what we're looking at right now. The setup's there. And we need Ethereum to kick it off, and that's only really going to occur in my book. It'll start to look better above 4,400, but it really doesn't occur until the all-time high is broken and we see close over close momentum starting to break out towards the 6,000 to 6,500 area, which is definitely a possibility. It's the setup is there, but you also want to see Bitcoin cooperating, because if Bitcoin starts to head back down, we are likely going to see Bitcoin dominance head back up. It did recover the 60%, and I keep seeing the number change. Alt season is going to begin below 60%. Well, let's take a look, because now Solana is the outlier. Remember, everyone thought that like Solana was going to kick off alt season instead of Ethereum. Well, now you need Ethereum and you need Solana and all the other large cap alts to start moving, because you might recall this back here in November of last year. Oh, it's alt season. It's below 55%. That's not the alt season you're looking for. That is a nice little alt pump, a mini alt season, if you will. This is a mini alt season. It's great. Can it turn into a full-blown alt season? Sure. I still think it's going to go sector by sector, and I've said that right along. We're in a much different market than we were in years past. But that is what you're looking for, is to get below 60. Sure, that looks good, but realistically, you got to get below this big red zone, start getting below 55, and really start getting down towards the 50%. That would look really good, and you've got a lot of alts cannibalizing their Bitcoin pairs. We're not there yet. I know that that's something that some people vehemently disagree with me on, and maybe I'm just being too conservative in the call, and you can predict the future and I can't, but it's just not there yet for me in my charts. Let's go to traditional markets. One of the big things that you might notice here on the daily is Dow did make a run for its highs, and it's now in a downtrending structure. We have a new all-time high on a bearish candle yet again. Now, here's NASDAQ is pretty interesting, because realistically, this can make another higher low, and then we can see continuation, and it just needs to hold this last low on closes at 22,673. SPY or SPX, whichever one you want to use. We can use SPY for right now. Did try to swipe for its all-time high. It did not quite get there. But again, it's coming off of a structure break. So we had the nice uptrend, downtrend is broken, it broke the uptrend, right? And could this be a lower high? Could it turn into that? Remains to be seen. It could also come down and make a higher low. That's what bulls are looking for, is a higher low on SPY and NASDAQ. And for, this consolidation look to resolve for Dow, which Dow realistically just needs to hold 4340. And then take out the top side here at 44,500. That would look really good. And, the setup's there. The bulls can absolutely take it that way. But I'm going to leave you with this. One thing that I am watching very, very closely, and that is the bond market. So we are getting, rates ticking up a little bit here. So we are seeing a little bit of a sell-off in bonds, not crazy. But one of the bigger things, so 2-year on the daily, looks like it does want to come back up, but it's got, it might end up right back in a bearish structure. Same for 5-year yields. It does look like it wants to tick back up, but it could end up in a bearish structure. It's in the bearish half of the bands. 10-year, same deal. But if it starts taking out those last lower highs, that's where things get really interesting. And here's what I'm watching. So corporate sector, investment grade bonds, there is some ETFs for them to just kind of get a quick picture. We have investment grade is now, in a nice uptrend after putting in a structure break and a little bit of a downtrend, recovered into this uptrend and took out its last highs. And it's even taken out and swung the March highs. Now, can it recover above there and keep pushing? That's what I'm looking for. And at the same time, we see a little bit more of a bearish look on high yield, which is more risk. And this is all about risk appetite. And in this market, if we see risk appetite going down, typically markets are going to take a little bit of a slide. Doesn't mean that it's crash time. It's just more correction, accumulation, stuff like that. And then we wait for the real move. Whether that move is going to be bullish or bearish longer term, meaning like days or weeks that turn into months, remains to be seen. But I'm watching the risk appetite as where are high yield corporate bonds headed. And right, we saw a lot of appetite here. It was much stronger in terms of it coming off the lows. I mean, to be fair, so was investment grade, but the structure was much cleaner on high yield, and it was a first mover, and it was moving much more aggressively to the upside. So risk was back on the table. And then we see that if we end up heading down for the 7 to 10 year, and this is IEF, it just takes the 7 to 10 year U.S. Treasuries, and then TLT is the 20 year. If these head back down, rates are going to head up, and if we continue to see high yield head down and corporate either stay steady or head down as well, then we're getting cash coming out of the market, and that's going to equal a downside move or a corrective move that could end up lasting a little bit longer than people expect. So it's early going in the week, and in this case, there's not much to make of it except for this pretty fat rejection if you're looking at Bitcoin. Now it's about how well do traditional markets hold up? Can Bitcoin hold the range lows if it does test them? And then we come back to it, of course, on Wednesday. And that's when I'm going to talk to you again for the Wednesday check-in. I hope to see you here. And I hope that if you enjoyed these videos, or if you do enjoy these videos, that you like and share them. I do very much appreciate it. And I will talk to you again on Wednesday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. See you Wednesday.